All right, we are here. Oh man, welcome back. It's been a while.
Mhm.
This is another episode of Silver Lining TV where we motivate and inspire people to create a better life through real estate. And yeah, it's been a long time. I'm joined, as you can see, with two of my business partners, Lauren and Joseph. How are you two doing today?
Good. I'm doing good.
Doing great. Loving my life.
Doing great. And what y'all been
Mhm.
up to?
Ooh, man, we've been through here in the office a lot of accountability meetings. So
Mhm.
focusing on personal goals, business goals, and just making sure each other reach those goals that we're trying to reach. Let me scratch that. Commitments,
There we go.
because when it's something that
Mhm.
you actually want to change, you'll
It's a
stay committed
commitment.
to. So we've been focusing on hitting our commitments these past couple weeks.
Yep,
Mhm.
I love it.
Yeah.
A commitment. A commitment gets done no matter what, right?
Yeah.
Exactly. Exactly.
I love it. What about you, Lauren? I know you've been a part of that too, but what's been going on with you? I know you've been killing it, killing it.
I
How are you feeling?
yeah, just working hard. Been trying to get on the phones more and get people under contract.
Yeah.
So that's that's what I've been up to.
Yep.
You've been
Yep.
pretty
We
efficient
got
at it.
say what, Joseph?
And you've been pretty efficient at getting people under contract, so that's
Yeah.
awesome. Good to see.
I think you've been averaging over the past 5 weeks, like 1 to 2 a week,
Mhm.
probably. So that's good. And that's what we're going to talk about today, everyone. If you have not seen the title, we're going to talk about the huge mortgage rate drop that happened the past week. Because as you could tell, Lauren is very efficient in helping her clients take advantage of this market. And I think there's a misconception out there about what type of market we're really in.
Mhm.
And is it the right time to make a move and stuff like that? And we understand the headlines, and that's why we want to bring it to you guys, the actual truth, what obviously our clients are experiencing, but I'm sure there are other people out there in the market who are really feeling what this market is truly about and the opportunity that is literally in this market. So let's talk about it. I'm sure I just throw it to Joseph. I throw it to you. Well, ladies first. We'll throw it to you, Lauren.
Okay.
What have you seen? Well, two-part question.
Okay.
First, over the past 5 weeks, what have you noticed about the market
Okay.
and how it's been beneficial to your buyer clients? We'll focus on the buyers right now. And then the second part of the question would be over the past week with this big drop in mortgage rates around our office, what has been the discussion to inform the buyers about what that really means? Okay.
Yeah.
First, yeah, so go ahead.
So the first part was how have I seen the market
Over the past 5 weeks, what
moving
have you
about?
seen in the market for your buyers today?
It's actually been very good for my clients. A lot of them have gotten discounts or they're getting closing costs covered. They're getting help. And that's the
Mm,
biggest thing is that buyers are finally able to get that help. Um, for my clients specifically, I for some of them, they were able to get a lot of help. For some of them, it was maybe $2,000 in closing costs, but that's 2,000 more than what most people have been used to from the past 2 years.
oh yeah,
So,
for sure.
so yeah, from what I've been seeing, it's becoming more buyer friendly.
I like that. Um, and then over the past week with the rate drop, the big rate drop,
Yeah.
what has been the topic of discussion? Oh, as far as our focus on our team, and we can only speak for us
Right.
and the conversations we're having as professionals within our team. But what has been that message that we want to get out to the buyers?
Well, our message is always it's always a good time to buy. There's not a good or bad time to buy. There's always a great opportunity wherever you can find one.
Mhm.
Um, so with this drastic drop, there has been so many more opportunities because a whole percentage was taken off. So for some people, that means they can afford more. Or for some people, that means they can get back in the market, because some people were completely thrown out when it was at 7.22. So with a 6.61, they're able to finally get back in the market again.
Yep. Yep. And Joseph, thank you, Lauren, for that, giving that perspective, because I don't see a lot of agents having this. At least I don't see it because I'm not in their office, but I definitely don't see it on Facebook often. Go ahead.
I think right now, because we used to say it all the time, because we didn't really see a lot of people saying it, but I have seen more and more that agents are more active on Facebook, but I see a lot of people using the phrase date the rate, marry the house.
Yeah.
And I'm like, man, nobody else used to use that. And now everybody's starting to use it. So it's like, okay,
Yeah.
but what else can you throw out there that is just dating the rate? Because you can say that all day, but what does it mean?
There we go. Boom. Like giving more context into what that really means is it's a beautiful saying. The one that I don't hear often is the date the rate, marry the house, divorce the landlord. Like the divorce the landlord part is one that I haven't seen often.
Yeah.
But, I want to give context into that, and I want to throw it to you, Joseph. When people say date the rate, by the way, I found out a lender, I don't remember the lender's name. It wasn't an agent, it was a lender who came up with that saying.
Wow.
Which it makes sense because the lender would have more understanding of what that truly means, right?
Yeah.
So it makes sense for them to come up with it. But let's get context into that. And thanks for this transition, Lauren. What does that mean? What does it mean?
So for the date the rate, marry the house type thing, and basically it comes down to whenever you are educating your buyer on the market and how it's moving, the rate is going to directly affect your monthly payment, right? So, and before interest rates, took that drop over the last week, we primarily focused on what can you afford monthly, and then to go even further, does this house that you're looking at, is it worth it to you to pay this amount per month, right? So with your interest rate, if it's higher, you're going to pay a little bit more, right? And if it's lower, that's a little less, so you get a little more bang for your buck. But ultimately, where are you the most comfortable, and how do you feel about the house to feel like, you know what, if you stay in the house for 30 years, over the next 30 years, I feel good about paying this amount for this house because it's worth it. And I always take into account intrinsic versus extrinsic value, right? So an extrinsic value is something that's outward. It's like, hey, this is the amount that I'm paying for my house. That's your extrinsic value. Your intrinsic value is what you get from that house, right? So something that you get from the house, some people, it's peace of mind. It's something that they own, more space for their family, things of that nature, right? So if you are really taking into account what your buyers need and how they're going to be purchasing in this market, really break it down to them. What are you comfortable with paying, and what's going to give you that peace of mind when you're paying for the house that works for you and your family? Okay. So the rate it's one focus, but you definitely want to take that a little bit deeper with them. And we always say in our conversations to go 3 deep with someone. So when someone tells you something that they want, ask them why. Don't just say, don't just be an order taker, because over the last couple of years, let's be honest, some of us have been order takers. Oh, you want this house? Let's go find it. That's fine in some cases, but
why?
But why? Exactly. In most cases, people, sometimes they want something because they think it has to be this way. And I'll give you an example. Some people want it to wait so that they can put 20% down, right? So yeah, I want to wait to put that 20% down. And so I think I'm just going to hold off for a minute till I have that saved up. Not knowing that while you're waiting to build up that 20%, and just to give you an example, 20%, say on a $200,000 home, is $40,000. So are you going to be able to save up $40,000 in the next 2 years, if that's what you're trying to get to, in order to beat what that rate is going to be, or what the value is going to be in the house later? Because you might price yourself out of the market, and the same home that you're looking at now is going to be way more expensive 2 years from now.
Yep.
Exactly.
we've had a great appreciation rate on the value of houses over the last couple of years. And I think last year we were talking, it was the average homeowner in the US had gained over $50,000 in equity over that 1 year. So you can imagine trying to save up $20,000 or $40,000 just so that your house that you're trying to get is now $30,000 to $45,000 more expensive.
Yep.
Yeah.
Yep.
So,
And to be more specific on that, just so everybody knows, to be more specific, he did mention nationwide, the average homeowner gained 50,000, 51,000 in equity. In Indiana, it was 31,000. Because some people may be like, well, that's California. That's in Indiana, the average homeowner gained over $30,000 in equity.
Mm-hmm.
Exactly. Which is why some people who are in our current market today, they are seeing houses that maybe were on the market a couple of years ago that people are moving out of, and maybe they're moving out of state, but that house is now listed for way more than it was when it was listed the first time.
Mm-hmm.
And it's not because people are gouging, it's because the value is there, right?
Right.
So that's something that you want to take into consideration as well. So if you're going to hold off on buying, make sure that you're educated. So that's what we got to do with our clients. Make sure we're educating them what that rate actually means, how the value, trends, things of that nature.
Yeah, absolutely. And what oh shoot, this is like the worst moment to lose my train of thought.
It's okay. We got a ticket to the train. We'll catch it.
What? Yeah, I was about to say, put a divot in that.
Lauren, while you're thinking about it, keep thinking and then just cut me off when you find it. Because I was going to say, let's talk about dating the rate. Like because I think you really broke down marry the house.
Mm-hmm.
Make sure you're very clear on what you're looking for in a house, why it's important to you, right? And then the date the rate part. Mm-hmm. Because I know that's been a very big topic over the past, especially Tuesday. At our Tuesday sales meeting, we talked about this and what date the rate actually means and how to articulate that to our client. And you found it? There we go.
Yep, I remembered it. I actually had a great conversation with a lender the other day, and we were talking about mortgage lenders versus credit unions. And the difference is a mortgage lender has more programs because they are actually licensed. And so you have some people that they may think that in our market specifically, I've had this conversation many of times where people think that it's overpriced, these houses aren't worth it. And it's very simple. If the house wasn't worth it, if that house has a loan on it, the value has to be there. Mm-hmm. So they are not skyrocketing prices now. Someone pays cash and they do whatever they please, by all means. But if there is a loan on that home and it was appraised and it closed, that value is there. So our market specifically, these homes are priced correctly. Now, sometimes they're a little bit over, but we're in a market now to where the house has to be correctly priced. Yeah. So if you see a home and you think it may be a little overpriced, ask somebody.
Yeah. No, that great point. Great point. Somebody was willing to buy that house. Mm-hmm. So to that one person, which is all it takes, it was valuable. Mm-hmm. Whatever price they purchased the property at, they felt it was worth it. So yeah. Marry or date the rate. Okay. So a lot of people that when they marry the house, but they're not happy with the rate, right? When you talk about dating the rate, I mean, dating doesn't really have much of a commitment to it, right? Right. You could go on a date with someone, but that doesn't mean you're obligated to be with that person after the date. Yeah. Right. Now, when you date the rate, you could close on your home. You can enjoy the intrinsic value that Joseph was referring to. And over the course of a year, maybe 2 years, you're still unhappy with dating your current rate. That's when you can stop dating that rate and refinance. Mm-hmm. Right. So let's talk about that real quick. And you know what sucks is that it's already, I mean, time is flying, guys.
I know.
We may have to do a part 2 to this because we could definitely go on it like for an hour. But let's talk about dating the rate and the conversations you're having with buyers about what that really means. Because here's let me tee this up to you. Let me throw an alley oop real fast. A good one. It's gonna be a Chris Paul alley oop.
Nice.
So buyers today are thinking the rates are too high. I know I need to buy, but the rate is too high. Earlier, this time last year, rates were 4%, high fours, maybe low fives, right? 7, mid 6% now. Oh, I don't want to buy. What would you tell that buyer right now? But they need to buy, by the way. They need to buy. So what would you tell that buyer to ease their mind? Go ahead. Whichever one.
I can.
Go ahead, Lori. Oh, somebody, please.
I got you. Okay, go ahead.
Okay. You can go next. The conversation I'm having with my buyers is that, well, right now, interest rates have dropped. So that conversation has kind of like perfect. Let's keep looking. When they kept creeping up, the conversation was obviously you can always refinance. But if you are needing to buy right now, why? Like, again, why do you need to buy? Like, if you're renting, we have the saying of you're paying 100% interest if you're renting.
Yeah.
So what is the difference between 100% and 7? There's a big difference.
Big difference.
So, I mean, if you can, again, what Joseph said, if you can keep that monthly payment at what you're wanting to keep it at, and also have the pride of owning a home, then the percentage doesn't really matter. That monthly payment is the prerogative, I guess you could say.
Yep.
So I guess we kind of hop around like interest rate. Okay, this is what we're really trying to combat right now.
Yep.
Is the monthly payment.
Can you afford the monthly payment?
Right.
And have the mindset that the most important thing is you're getting the home that you want, that you can afford, and understanding you could always refinance later, date the rate, right? And also breaking it down further to where, like, if somebody was very concerned about the rate, but they needed to buy and they found the perfect home, but they were just uneasy, unsure. And if we're going to have them think in a logical way, because that's our job, is to help bring clarity and help our buyers make the best decision possible. We want to explain the difference in what a low rate would do to the market versus what the current rates, which are still low, but historically, but what a higher rate market looks like versus a lower rate market. And here's the discernment. What I like to say is, if you have a 6-7% market that we're in right now, it's a great time to buy, because you have less buyers that are willing to overpay for a house. And if that is true for you, buyer, that means you don't have to pay more than you really are willing to. You have an opportunity. It's not a guarantee, but you have an opportunity to be able to finally get an inspection on the property. You have the opportunity to not have to purchase as is, or sight unseen, or just all that stuff, right?
You can get repairs.
You can ask and negotiate these days, right? Repairs. If rates drop to 4% tomorrow, do you know what would happen to the market?
It would be crazy.
It would be bananas. And buyer, you would be, again, in another situation where the offer, a $200,000 property, you better come in at 220 if you even want to have a shot at a seller looking at your offer.
Yep.
So I always tell people, listen, if you were to buy today a $200,000 property, and you're like, well, I don't want to do anything until rates are 5%, but they're currently, let's say you secure a 7% rate for a $200,000 property. The difference in 1 year, as far as interest being paid from that 5 to 7%, the difference is right around $3,000 in that 1 year, right? But what people don't understand is that's our timer. That means we're over on time now. What people don't understand is that $3,000 in that 1 year, if you were to wait for rates to actually drop down to 5%, you're going to pay $10,000 more, 15, maybe 20, maybe 25. There's been buyers that paid 30 plus more to get the home that they get. So which one is more, 3,000 or 10,000 plus on the purchase, right? I'd rather go with paying a higher rate versus paying a higher price tag on home. Period.
So very
all right. Let's hold on. We got a comment too. I want to make it very clear to everyone. I apologize. We made a commitment to not be on this longer than 20 minutes, and it's already been over 20. We will. Hey, Lauren and Joseph, are you guys open to hopping on here next week for part 2?
Yes.
Oh, next week is Thanksgiving.
The week after.
Yeah.
Maybe we'll do it Wednesday.
Let's do it Wednesday. I'm down for Wednesday.
Well, maybe we'll do a Tuesday one.
Yeah.
Tuesday?
Maybe we can do a Tuesday one.
Yeah, Tuesday.
We'll talk offline, but we'll commit to a part 2. I'm gonna pull up a comment real quick, and then we're gonna do last thoughts. Dustin, Antoine, you the man, miss you, buddy. Dustin, what's up, brother? Hey man, I miss you too, man. I hope you and the family are well. It's good to see your face. I see your little photo right there with your little mini me. I appreciate you, man. If you guys have any questions, we're going to take another minute. If you have any questions, please put them in the comment section. We'll be happy to give that value. Thank you, Dustin. Last thoughts before we hop off here. Joseph, what you got?
I got you. All right. So interest rates are always going to fluctuate. That's a given. That's the only constant in the market is that it's not constant, right? Such as, right. So there are certain programs out there that some lenders are doing to help with that as well. That can help you secure some rates. And that, you know what, we'll probably touch on that the next one, right? Part 2, we'll touch on that. But there are some programs out there that are available that can help you secure maybe a better rate for yourself, right? And gives you the opportunity to refinance again. But more on that next week. I just want to say this. If it is within your best interest to buy a home and you absolutely need to, which at this point, I feel like anybody who is looking for a house deserves to have a house, right? They obviously have come to terms with the fact that, hey, I need to have ownership of something. And little do people know that your home is actually a part of your net worth. More for that later, right? But if there's something that you absolutely need to do, again, focus on that intrinsic value for yourself. Is this house going to be worth me paying this much per month? Am I okay with that for the next couple of years? Maybe I can refinance later, but am I comfortable and able to do this? Because our number one goal is to get you into a house, but I'd say our number 0.5 goal is to make sure that you can keep that house. Okay. Yeah. So that's something to consider, but always reach out to your local real estate professionals. Talk to anybody you can who is in the real estate market, preferably a professional like a lender or a realtor. Even talk to a title company rep if you can. They see a lot of stuff as well.
I would recommend agent be your first choice.
There you go.
Agent be because the reason why, Joseph, I say that is because, and I also want to make this very clear. Not every agent is created equal as well, but a good agent, if you do your due diligence and you choose the right agent, a good agent, the right agent will make sure that they'll crunch the numbers with you. They actually know the housing market because they're in the trenches every day, but they can also guide you to the right lender who's going to take their time and present to you a lender who has the heart of a teacher and actually explain to you what your options are, what your benefits are, instead of just saying, oh, you're pre-approved FHA or USDA, blah, 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 and that's it. Let me know when you get a house.
Right.
Somebody, so just I would say if you're going to choose one, yes, everyone can provide value to you, but the agent, in my opinion, the right agent, a good agent, a great agent would be, in my opinion, the first person you should talk to. At least that's what I would do.
Yeah, I was about to say, to add on to what Antoine just said, what I do, you can ask literally probably every single one of my clients. And I would say 99% of them, every time before we put in an offer, I asked their lender to give me an estimate and to see what the monthly breakdown was and what they would have to bring to closing and what was expected out of them. That way, they were not walking into anything blind. If you're a realtor or if you are confused and they're not doing that, you need to talk to them.
Yep. 100%.
Absolutely.
What matters most is your unique situation and your options. So, is it a good time to buy? Absolutely, depending on your situation. Okay. Now, we haven't talked about our sellers. We just really been focused on buyers, but most sellers are buyers too. I'll end it with this. Yes, we are. If you're wondering out there, we are still in a seller's market. Okay. Inventory is still extremely low. And we still have a couple months of inventory. Could we see a neutral market? We could, but we're still in a seller's market that is normalizing. That's all. That's all it is. So if you're a seller, that what we're telling you right now isn't that you won't get top dollar, right? But what we're telling you is you just got to be a little more strategic when you place your home on the market these days. You can't blindly choose a number out of thin air, put it on your property, and then list it and expect to get an offer the same day if it's unreasonable, right?
Yeah.
Today, it really does require you choosing the right agent that's going to sit down with you, explain the numbers, break it all down, and come up with an action plan. It's going to help you get your home sold fast and for top dollar. Okay. All right. We're going to end it with that. Karate chop. All right. Hey, we appreciate all you guys. Our commitment here at Silver Lining Real Estate Group is to provide value. We don't ask for anything in return. All we ask is that you take the information you learn and you make the right decision. Okay. That is our commitment. Until next time, you guys stay safe and we'll see you guys next week. Take care.